Now just imagine this: price and uptrend forming series of higher highs and higher lows, higher highs and higher lows. Now suddenly price break the previous higher low. At this point, you're going to be thinking two things. One, you're going to be thinking this is an inducement for price to trade to the upside. Or you might be thinking that this break of structure, this break of the last higher low, is actually a market structure shift for price to continue to the downside. So these are the two possible scenarios that you might be thinking. Now, when any of these scenarios that come up in your mind is actually right, you're actually correct, right? Whenever price breaks the last higher low in an uptrend, it can either be price trying to do two things. It can be price taking out this inducement to trade to continue to the upside, or it can be a market structure shift. So these are the two reasons why price can actually break this last higher low. But the issue is, how do you know which one is it at a particular point in time? Because of in some cases you might see this thing and think, this is a market is a you might see this and think this is a market share shift, so you try to sell off from this place, put your stop loss at this place. So you might try to put your stop loss at this high and target the low. In another case, you might see this one as an inducement. You might be thinking this is an inducement for price to trade to this other block. You might try to buy off from this other block, put your stop loss at this low, and put your take profit at this place. And in this case, you get stopped out, right? So how do you tell the difference, right? How do you tell the difference? How do you know when this is an inducement or when it's actually a market structure shift? Because if you have been trading for a while, or the more you are trading, you are definitely going to encounter this scenario. It's a must. You're going to encounter it. So how do you tell the difference? That's what this video is all about. In this video, I'm going to give you guys a simple step-by-step framework to tell the difference between an inducement and a market share shift. So this is what this video is all about. So if that sounds like something you're interested in, go ahead and smash that like button and also subscribe to the channel, and I'll see you guys around. Now whenever price is trading an uptrend, now suddenly breaks the last higher low, you want to ask yourself two questions, because as we said, there are two things price might be looking to do at this point. It might be looking to continue to the upside. It might be looking to continue to the upside. This might be in an inducement for price to continue to the upside, or this can actually be a market structure shift for price to keep on trading lower, right? So for you to be able to know or differentiate this and align yourself with the market, you want to ask yourself three things. You want to evaluate three things. The first thing you want to ask yourself is, did price hit a higher time frame key level before the break? Did it actually trade to a higher time frame key level? Is this change of character, this whole scenario, is it occurring in a higher time frame key level? Did it hit a higher time frame key level? The second thing you want to ask yourself is, was liquidity swept? Did this actually swept liquidity? Is there any form of liquidity swept before the break of structure? Did it actually sweep some form of liquidity? Is there a liquidity that price actually swept before this whole break is occurring? The next thing you want to ask yourself is, what is the quality of the break, right? What is the quality of the break? When price break the structure, how did it break it? Did it break it with displacement, or did it break it with slow methodological, slow price action, taking out this slow? The last thing you want to now ask yourself is, what reaction the price did as a trade to the previous order block. Now these are the criteria you are going to use to determine whether this is actually an inducement or a market structure shift. Now let me explain all this now. For an inducement scenario, a scenario where it is an inducement, you don't want to see price, ideally you don't want to see price actually trading into a key level before this retracement. And you don't want to see that price swept liquidity, and you want to see that this break of structure is slow and not violent. And lastly, you want to see that price is showing good reaction off of this down order block. So this is the criteria for an inducement. But in the case of a market structure shift, you want to see that price actually traded to a higher time frame key level. Then you want to see that there is some form of liquidity price swept. some form of structural liquidity price swept before this break of structure. Now the next thing you want to look for is you want to see that this break, this last leg of price is violent. You want to see that it's aggressive. Now finally, you want to see a very poor reaction out of this place. You want to see that price is not actually respecting this part. Right? You want to see that price is not actually respecting this order block. It's showing very poor reaction off of this order block. Now in this case, it's going to be a market structure shift. Now let me try to explain all this. You want to see a poor reaction, maybe self price violates it in the first move. So in this case, it's a market structure shift, right? So let me explain all this and give you reason for this, right? Whenever price wants to actually switch structure, when institution want to change the state of delivery, right? What do? The first thing they usually do is they need to trap trade. They need to take out liquidity. They need liquidity to move the market to the opposite direction. So that's the reason why they take out liquidity. Two, before price start going to a different direction, before the market switch, it usually happen in two cases. There's always two scenarios or two reasons that for a market structure shift. One of that reason is that when price trades to a higher time frame key level, that is it. Before price will switch structure, before price will change the state of delivery, it usually tap into a higher time frame key level, and that higher time frame key level will be the catalyst to the reversal you are seeing. Or it can actually be that price has traded to to an all-time high. So these are the two scenarios that you have a change of character or a market share shift. One, when price trades to a higher time frame key level. Two, when price is in a is at an all-time high, right? So in this case, this price trade to a key level might be the catalyst to the reversal. So and also when price wants to change the state of delivery, it always does it with a explosive move, right? The price is always going to be explosive, breaking this structure. But once it is slow move to this structure, it can usually be a liquidity sweep to continue to the upside, right? And next thing is that if price is showing reaction as it relates to this other block, this lower order block, it can be that it's an inducement, right? It can be that price wants to react off of this place to continue to this scale. But if it shows poor reactions, maybe price already violated the mean threshold of this lower order block, or sometimes can even violate the entire order block. This can be a sign that price is not it has changed the state of the wave and is now only respecting the bearish side, right? It's only respecting bearish arrays. So, and something else to take note of, in most cases, when price is not going to break this last higher low, it's just going to weak it. But there are actually cases which I will show you guys in a bit where price is not going to weak it. Price is actually going to break it with a body close, but it's an inducement, and that's what I'm teaching you guys. Now let's come again to clarify this. I didn't script this video, so it's a bit not organized, right? So whenever price is in an uptrend, this is an uptrend scenario, flip the distance for a downtrend, right? So whenever price is in an uptrend and price breaks structure, there are two things that come to your mind. It can be that price is actually trying to trade to the lower order block and this is serving as an inducement, or it can be that price has changed the state of the you have a market structure shift. So for you to evaluate this thing and know which one is which, right, you need to evaluate these three criteria, right? And the more boxes that ticks in these four criteria, the more um the probability stack up. None of this is guaranteed. I'm just giving you based on my statistic, based on backtesting results, right? This is what works. So the first thing you want to look for, is it occurring in higher time frame key level? If it's occurring in higher time frame key level, it's most likely going to be a change of character. Two, you want to check, is there inducement, is there liquidity sweep before the break? If there's liquidity sweep before the break, it's most likely going to be a change of character. If there's no liquidity sweep, it's more likely going to be an inducement. Third, you want to look at the quality of the break. Is it with a displacement or just slow price action? If it's with a displacement, it's more likely going to be a change of character, a market share shift. But if it's with slow price action, it's more likely going to be an inducement for price to trade to the upside. Then finally, you want to look at the reaction at the lower order block. If the reaction at the other lower order price starts showing rejection, immediate price is tapping into the maybe the opening of the candle of the order block or the mean threshold, then you can know that that is actually price trying to react off of this place. But once price violates it or maybe violate the mean threshold or sometimes violate the order block entirely before this move up, then you can know this is likely going to be a market structure shift, right? So these are just criteria that that's going to help you while trying to determine these scenarios. Right? Nothing is going to be 100% accurate, but using these criteria is really going to help you. Sometimes you can see a key level, you can be a price tap into a key level, but it can still turn out to be inducement. But follow these rules. You want to have a systematic approach. That's what I preach every day to trading. Follow these rules whenever you come up with these criteria. Now let's go over to some live charts and let me try to show you guys more of this thing occurring. So this is the first example we are going to be looking at. Now, from this point, price is in an uptrend, right? We have a break of structure forming higher high, higher low, higher high. Now notice what price did here. Price comes back down at this point and breaks this previous higher low, right? You can see it breaks this previous higher low. Let's try to mark it out. It breaks this previous higher low. Now, based on the rules, whenever you have price breaking the in a downtrend, in an uptrend, when you have price breaking the last higher low, it can be two things. It can be price trying to do two things. It can be price is trying to reverse, and this you can call this a change of character, a market structure shift. Or is that price is actually taking this inducement because this is an inducement to trade to the lower order block. Either scenario is actually true. Either scenario can be possible. These are the two possible scenarios you can have. Now, to validate this thing, you want to look out for a couple of criterias, right? You want to look out for a couple of criterias. And what are these criteria I gave you guys? Now, the first thing you want to look out for is it occurring a higher time frame key level. If price look at this point, you can see that price is not actually tapping into a higher time frame key level. You can see there's no clear key level price tapping into. So this is more likely. So you're going to be ticking up the box since there's no higher time frame key level. This traded to before this reversal that breaks structure, that break the structure. This is more likely going to be an inducement. So that's the first criteria. The second criteria is the price actually swept liquidity before this retracement. That is this retracement that breaks structure, this break of structure, this move of price that breaks structure. That is the second thing you want to look for. The price actually swept liquidity, and as you can see, price did not sweep any liquidity. Price did not sweep any. Let's try to make this thing straight. You can see that price did not even sweep this liquidity before this break of structure that occurred at this point. So this is the second criteria you're going to look out for. So since price did not sweep liquidity before it break this structure, it's more likely that price is trying to that this is more likely an inducement. Like this is an inducement type move. I hope you guys understand what I'm trying to say. Now, the next thing you want to look at is what is the quality of the break, right? So now, if you look at this thing now, you can see what price did here. This is not as violent, although it's actually violent, but not as violent. You can see the distance. You can see the kind of move price is showing here, which retracement is it's not showing intention. This is what is called a violent move. This bullish candles only, right? But the last thing you want to ask yourself is, as price tapped into this key level, what kind of reactions did you see? Did you see price trying to respect this key level, or do you see price showing acting like it doesn't even see the key level, like the key level didn't exist? In this case, you can clearly see that after price dropped to this key level, it showed reactions off of this place. So if I was in a trade, I'm looking to trade from here. After seeing this candle reaction, I will know yes, this is an inducement. So this is a case. So I'm going to know this is an inducement and price is likely going to continue to the upside because of the reaction is clear. But had it been price did something like this, maybe we disrespected the other block or traded so deep into the other block in the first move, I'm going to think twice. I'm going to think that this is actually a market structure shift. Why? Because of price should at least show intention that it want to reverse from the lower order block if it's an inducement. So I hope you guys understand what I'm trying to say. If this video is confusing to you guys, try to watch it again. And if you still don't understand it, let me know. Let me leave a comment in the comment section. I'm going to come back and reply. I'm going to reply to every comment, and if it warrants me to make a new video, I'm going to make it. I didn't really script these videos. The reason why I come out and start making this video is because of it's actually a question that one of my students just asked recently, and it's a very vital question, right? So you guys should try to get the rules, and if you don't understand it, let me know in the comment section. I will always reply, and if it warrants me to make a new video explaining it well, I'm going to explain it to you guys. I just want to be sure this is a question that you guys are usually having. This is a problem you guys are usually having. So yeah, I hope you guys like it. By the way, in this channel we do more of trading. With this trading, this is the only channel you need to succeed in trading. Because every week I come up live and read market structure live, show you guys the setup I'm looking to take. Post the setup in my free Telegram channel. So basically, this is all you need, right? You understand, watching the video, you understand the logic behind the trades that we took, and you are going to also be taking the trade. So this is the best free mentorship you can get. Moreover, if you want to join our premium mentorship, you're actually on a challenge which we are trying to, and the goal of the challenge is to accumulate 200k in perform capital before, well, that's the goal, right? Starting with the lowest perform, and we actually did similar challenge on August, and we were able to we only passed three profile, right? We bought the first 5k, we passed it, bought the second 5k, we passed it, and we used the money to scale up to 25k. So that's where we stopped, right? Last year was slow because of December. December was it's not much of trading, right? But this year we're going to hit that target, which is not this year, actually just few months. We're going to hit that target, which is a 200k. So, and you can actually check out the proof in our free Telegram channel. Just click the link in the description and search something like update on the trading challenge or something like that. You're going to see proof. I don't want to go and explain you guys. You can go there and see it. You're going to see proof that the last year one we actually did well. So if you don't have any strength for learning on your own, you have the money, which I suggest you do. You can actually pay for mentorship. Send me a DM on our free Telegram channel, and I will fill you in. So yeah, that's what we do on this channel, and I hope you guys like it. As always, like the video and subscribe to the channel. I will see you guys around.